Hi everyone, welcome to this week's edition of Midweek Market Update. I'm Ashley Roster with Victory Fiduciary, and today we're going to talk about the Santa Claus rally that I talked about last week, and if it's possible that the Grinch is going to come in to kind of steal Christmas from us. So some things that are going on that I think is worthwhile for us to discuss and get into today. Number one, though, I do want to say that I'm so thankful for how many of our clients and community members who watch these videos who have also participated in the coat drive that we are running right now for some local community schools. As you can imagine, the need is significant at this time, and so I'm really excited to let you know that we'll be placing 32 coats on Friday with families in need, and then another 20 next week. So thank you so much for following along with us and helping as you're able to with that. So we do appreciate that, and thank you for not being Grinches on that end. And so today, what we do want to talk about, though, is we have a lot going on. And so today, if you are watching the market, you can see that we've had a kind of muted week where not a whole lot's been going on in terms of market movements. It's kind of been like sideways trading. And then today, the bottom kind of dropped out from a bunch of different sectors. And that was really all related to the fact that stimulus talks continue to break down right now, and so it's likely that it'll be difficult to get anything done between now and when we have our new president sworn in. But it's interesting that the market just continues to be so dependent upon stimulus, and so I've said all along that it was a little bit concerning that this stimulus was almost kind of like a drug that drove the market. So what I thought was really crazy was that on Friday, Pfizer announced that it was going to be having some supply chain issues to be able to get the vaccine, specifically in the United States, and that we were going to be getting less doses of the vaccine than we had originally expected. So you'd think that that'd be bad news for the market, right? Well, you'd be wrong, because markets actually shot up, and the thought process was that, well, now they're going to have to give us stimulus to help us get through these next couple of months, since it looks like we're not going to be getting as much vaccine as we originally thought. And so, again, just like this backwards thinking of the market, that bad news is actually good news because it means maybe we'll get what we want. And so stimulus talks again, sounds like they broke down again today. Not a whole lot of movement on that. Markets were very disappointed. And so we talked last week about the fact that I had some concerns in general about short-term market volatility. Number one, because we are in rebalancing, reallocating season where pension funds and hedge funds have to kind of go in and take profits and move things around and reallocate their portfolios. So that's happening right now, as well as it's distribution season. So as fund managers are having to make these distributions to members, they're holding on to the lowest amount of cash on record, really. So in order to meet those obligations, they're having to sell to be able to provide those distributions. So I really was expecting that there'd be some sloppiness in the market. So talking about that and the fact that our markets continue to be significantly extended. And so first one I just want to show you, so this is going to be the NASDAQ. And so remember, here's our means. So remember, going back to videos prior, these are averages. These are our long-term averages. Here's our 200 and our 50-day moving averages. In order for an average to work, a stock has to trade above and below it in order to come up with that average. And so right now, we are so significantly deviated, especially within the NASDAQ right now, between our long-term moving averages. And remember how that works. You can stretch a band as far as you can. And, if you have your friend come, so we're kind of like at the point now where that friend is pulling this band for you, and eventually that band is going to snap. And when it snaps back, as much pressure has been exerted this way, it's going to snap back the other way, at least temporarily. And so we've seen these deviations that we know that they can't hold forever. And so we said one of two things will have to happen. We'll have to trade sideways for a long time to kind of burn some of that off and then kind of normalize and then be able to kind of move on. Or we'll see like a quick reversion closer to the mean, and then markets can reset. So when we have days like today where the NASDAQ was down almost 2% for the day, it's always a little bit surprising, but it actually, when we can burn off some of that very quickly, it actually allows the index to be able to kind of proceed quicker. So this here doesn't include today's price action, but you can see we're still deviated. Something else that's really interesting, you can see it here. So relative strength is now 76. So we really like the sweet spot here between 50 and 70. As we get up into this quadrant here, when we see that, it's just kind of a sign that that index is probably a little bit overbought. So again, today's price action wasn't completely unexpected. And then when we look at the S&P 500, very similar story here that we're seeing. So you can see here we are here. Here's our long-term and midterm moving averages, 250-day moving averages. So again, and again, this isn't going to include the action that we saw today. S&P wasn't quite as substantial of a negative return today. It was not quite 1% correction, but so you can see we are deviated and we are extended. And so I would expect that it's likely that in the next week or so we could still continue to see sloppy trading. Otherwise, though, underneath, and so you can see here's our RSI right here. It's actually right below at 67, a little more of a normal number. So I think it's very expected that we could see a couple more days like this. I think it's important to remember when we look at the NASDAQ, let me just show you this again real quick. I mean, when you look at this run-up, though, that the NASDAQ has had, believe it or not, markets don't just go up. That's just not the way that they work. And we have really just had a significant uptick ever since we saw the bit of the sector rotation right after the election. Remember that happened. We saw money kind of flowing out of tech temporarily, and then it kind of reversed and came right back in. And so it's really been a steady upsell. So even though today seemed a little severe when it kind of came on very suddenly in the middle of the day like that, again, not expected. We've been saying this for a while, that if you were about to deploy new capital, maybe this week wouldn't be the time to do it. Maybe hold on because you'd probably get a little bit of a better entry point. But overall, things are still looking strong. Technicals are looking strong. We look at things like relative strength, and when we look at the other charts we follow, no significant issues other than what we've already been talking about, right? So the fact that we are still very deviated from corporate valuations. Markets are still very pricey, very expensive. COVID is surging all throughout the country, and I think that could be the one wild card for us, talking about the potential for a Santa Claus rally here. I read a report today. We added 1 million new COVID cases in 4 days. So that's pretty staggering. But it's not just new cases. We are getting more reports that hospitals are becoming overwhelmed. We are receiving reports that new ICUs are needing to be created. So governors are beginning to take some action, kind of shutting down their states into, instead of kind of moving forward, they're either standing still or in many cases even moving backwards. And so again, I think this surge was probably expected after Thanksgiving. So the question is, like, where do we go from here in terms of the economy? Because if we're going to, everything that was happening, the good things that were happening with the economy was going to be reliant upon us continuing to be able to move forward, not standing still or moving backwards. And so I think it's something that we have to be very mindful of. It's something that, again, it's why our portfolios right now are not 100% allocated on the tactical side, that we're still holding on to more cash than we normally would. Just kind of keeping an eye on what's going on and making those adjustments as needed. And so I think that we just need to be kind of aware. I always say that you need to kind of know what's in your holdings. So if you're wondering, well, what do I do now? Well, number one, do you know what's in your portfolio? Make sure that you know what you have and why you have it. So there, every one of your holdings, there should be a purpose to them. And you should really know, is this a winner or a loser? Because we have a philosophy that we cut our losers quick. So we let our winners run, we cut them quick. And so if you can look in your portfolio, and if something's not working in the environment that we're in now, that's probably just not going to work. And so those are things that I'd be looking at. I'd be maybe even adding some defensive positions if I had none in my portfolio right now. Those would be things that I might be considering doing. But so I would just say for now, just be kind of cautious, be patient. I think we're going to see a little more of of this in the next, at least in the next week or two. I think that if we can burn off some of the excess that we're experiencing right now that we've had, I think it could actually set us up for still having a nice Santa Claus rally. Now, if stimulus talks go positively, I think that that will absolutely drag us right on up, back up into the start of the year. And if stimulus talks continue to break down or continue to concern investors, then that may play into the investor sentiment for coming into the end of the year. So those are the things that we're watching right now. I hope you and your family are staying safe. I thank you so much for tuning in, and we look forward to seeing you next week. As always, if you have questions about anything that we talked about today, you can always email me, ashleyr@victoryfiduciary.com. I'm always happy to take questions, and it's what we're here for. So thanks for tuning in, and we'll see you next week.